Welcome to the Bogart Effect, a wealthy wisdom podcast. Please see important disclosure information at the end of the presentation.
Part of what we want to do is planning and running those numbers like you described to kind of see, what's your withdrawal rate, what's the numerator, denominator, how much you have versus how much are you taking, factoring in things like Social Security that's eventually going to kick in for most people, things like that. And then, if you are running that risk, and it's pretty clear in the analysis, especially when we run some fairly conservative investment growth numbers, that you're going to likely fall into that trap. You really need to look at that and consider, doing Roth conversions, just like you said, with the new, potential tax law, extensions and things like that. Don't have to be quite as aggressive as we may have been looking to do if the election had gone the other way. But still, it's going to make a lot of sense for a lot of people, I think. And when you're looking at also your situation, we see, like we talked about, what the tax brackets are changing, standard deductions, things like that. But really, it's also what is changing with your situation. The example being is that, I've got a lot of people that are retiring at the end of this year, and they're going to have basically their income drop fairly significantly. And if they're fortunate enough to have non-retirement money, like savings or brokerage accounts or things like that, we might be utilizing that for income next year, which is not going to affect their marginal tax brackets or earning tax brackets typically, or at least not too much. And so that's going to leave a lot more room for Roth conversions compared to this year when they're at their highest income earning years at the end of their career. Your last year, if you're retiring on December 31st of this year, your last year of work, you're probably making your highest salary that you've ever made. And then basically there's also people that have retired that may have incentive programs like RSUs that vest or non-qualified plans that have been paying out that might be, drying up now. And so these taxable events are going away. And if you, again, have non-retirement assets you can utilize to live off of, next year might bring a lot of different opportunities compared to previous years, even if you've already been retired.
The previous presentation by Bogart Wealth was intended for general information purposes only. No portion of the presentation serves as the receipt of or as a substitute for personalized investment advice from Bogart Wealth or any other investment professional of your choosing. Different types of investments involve varying degrees of risk, and it should not be assumed that future performance of any specific investment or investment strategy or any other non-investment related or planning services, discussion, or content will be profitable, be suitable for your portfolio or individual situation, or prove successful. Neither Bogart Wealth's investment advisor registration status nor any amount of prior experience or success should be construed that a certain level of results or satisfaction will be achieved if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Bogart Wealth is neither a law firm nor accounting firm, and no portion of its services shall be construed as legal or accounting advice. No portion of the podcast content should be construed by a client or prospective client as a guarantee that he or she will experience a certain level of results if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Copies of Bogart Wealth's current written disclosure brochure and Form CRS discussing our advisory services and fees are available upon request or at www.bogartwealth.com.